What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. I am here to have another wonderful learning session with you guys. We're going to be looking at stop losses today. We're going to be talking about some bonus picks, some swing trades. We're going to be talking about the book, and we're going to be doing some giveaways as we always do. So we support our community at all costs. All right. So first and foremost, let's go ahead and let's entice some of our friends to join us right now. So live now, come for bonus, secret, and picks. See if that helps entice our friends to come in today. All right. Boom. So there we go. So we're going to be talking about the stop loss today. Okay. So stop loss is very important, but it depends on what strategy you are using. So that's why I wanted to focus on that. Okay. But first, go ahead and let me know where you're tuning in from tonight, and let me throw you up on the screen and show you guys some love. Okay. So let me just make sure that the audio is good. Nope. Okay. Is it? Yep. There we go. Audio is working. So what do we got? Boom. Brown Ocean, Brooklyn, New York. Love your content. Thank you very much. Andy Van B, Muskoka, Canada. AJ from California. What else we got? Tom from Missouri. Danny's from California. Penny from Vancouver, WA. Sylvia from Miami. Your best from Ohio, I believe. There we go. Jonathan Brassfield with the $5 already. How's it going? It's going great, brother. It's even better with that $5. Thank you very much. What else do we have? Whoa, I can't pronounce that, from San Francisco. And what else do we have? Jamel Bay from Milwaukee. Give me one more. Give me one more. What do we got? Who do we got? We'll shout out our brother right here. Jonathan Brassfield from JB. So JB for short. From Alexandria. Is that Los Angeles? I don't even know, brother. LA. There we go. All right. So I'm very pleased to have you guys today. And today we'll be talking about the stop loss. All right. But before we do that, we got our brother Craig Griffiths again with the dollar. I believe that is pound or euro. I'm not sure, but I know it's worth more than USD. So we take those. Thank you very much, brother. All right. So first and foremost, let me ask you guys a question. How many of you trade with stop losses? Hit me with a 1 if you trade with a stop loss. Hit me with a 2 if you don't. I just want to get a feel from this. Okay. So hit me with a 1 if you trade with a stop loss. Hit me with a 2 if you don't. Let's see where we are in the chat. So I see a mixture. Very interesting. Okay. So types of trading plans. Okay. All right. So here is my lesson on it. So it depends on what your strategy is. So I like to separate trading into 3 categories: investing, swing trading, and day trading. Okay, so let's write that down. So I like to do investing, swing trading, and then day trading. Okay, so, and then I use options and stocks or shares. All right. So we're going to talk about each one of these in detail, so then we can discuss, when you should or you shouldn't be, or at least my experience with it. Right. So before we drill any deeper, let's get a pen and pad alert right now, because this is probably something I don't talk about enough, because sometimes I kind of get a little bit too much more into the details, but let's talk about the basics today. So as you guys know, little bro is here with me. He's on the stream. He's helping me out. He's going to be starting his own like swing trading / investing account. He has $3,000 in that account, and it just got funded, and he's going to start doing that on Monday. So little bro, why don't you tell the people a little bit about what your game plan is?
Well, basically, first of all, what's going on, guys? Sunday night, let's get the party started. So when Monday hits tomorrow, my game plan is to go in and just test the waters, just play around. I'm very young. I don't want to go into any session and be like, I got X amount of money. Let me try to play my hand and try to make double X amount of money. I'm going to buy one share and just play around with it and see how it goes. And, our purpose here at Trading Wars that Richard's built is to build content and good quality content. So I'm going to be spreading my story as a young 18-year-old trader, finally getting into the market. And I'm very, very excited. Also, guys, my other two accounts that I run, TW Holy Grail Trader and TW Double Inside Bar, is almost at 3,000 followers. I'm very blessed. I'm very grateful.
Let's take a
And
look.
let's go ahead, take a look.
Boom. Guys, can we get that to 3K right now? Is that possible? All right. So let me give a little bit more details on the account. So I'm going to be helping my little brother here with it. And I want to know if you guys want to learn more about this. It's going to be a hybrid of investing and swing trading primarily, but also day trading to learn. What we're going to be doing is, if you guys are really interested, we're going to do a series on this. It's in a tax-free account. Okay. So it's tax-free. He's a young kid. He wants to put in about $500 to $1,000 a month or less. Depending on, the bills and all that. And he's gonna talk about his growth and show you guys what he's doing. But you guys got to hit us real quick with a comment right now. Hit a comment on the video, okay, and say you want the investing session, okay, like you want to see that, because I'm gonna make a whole new YouTube series on that and talk about that, because that's a very, very different strategy. All right, and I'm gonna hit the refresh on this real quick and help
Let's
us get
go.
this to 3K by the end of the stream, guys, if you can. All right. So this account is using actually a Canadian account, because my brother is still in Canada. So he's using a broker called Quest Trade, and that is actually a tax-free savings account. All right. So a tax-free savings account means that whatever money you put in there, whatever gains you get, you should not be taxed on them. Okay. So that's something I think people will be interested in, but I'm not sure, because my channel is a mixture of day traders and all that. So if you guys want to see it, I got to see the support. So put it down there, and let's get back to the business here. All right.
Thank you.
All right. Thank you very much. So back to what we're saying here, guys, is you got to know kind of which bucket are you in right here. Are you investing in the stock market? Are you swing trading, or are you day trading? So when it comes to investing, I never use a stop loss. Okay? Because my time horizon is multiple years, and I use dollar cost averaging. And I'm going to show you guys a sample of this right now. But you got to hit me with a 1 real quick. Hit me with a 1 real quick if you're interested in that investing. I'm going to show you an example of dollar cost averaging, and we're going to discuss it, right? So investing, because I'm holding shares, all right? Not options. I'm just holding shares, not options, because I don't want to have any expiry when I'm doing investing. I just want to hold and hold and hold and hold, okay? And I'm going to not have I'm not gonna have a stop loss, because if it goes against me, I don't want to be liquidated. I don't want to take a loss. Instead, I'm gonna build my position. But my criteria, guys, for investing is very strict. So it must be a company that I use every single day of my life. So it must be a company that basically is like, I believe in the company. Like, I know their financials are good, their charts look good, and I'm willing to sit through any pain. So if I have to sit in it for 5 to 10 years, I just do it, right? So that's my mindset going into it. So that's why if it goes against me, I'm actually willing to dollar cost average. So we're going to start off with my number 1, which is Microsoft. And I'm going to show you about Microsoft. So I've been investing in Microsoft for a long time. And before we get into this any deeper, I'm going to need you guys to get a pen and pad right now, because this is actually a full strategy that I'm going to be sharing for free. Okay. So get the pen and the pad out right now. So get the pen and pad alert. All right. Get it out and let's get going. So with Microsoft, so as you guys know, right, I was a student. I got my CPA, all that. I had a lot of student debt when I graduated, just like a lot of you. And because of that, it took me a long time to actually have like money that I could invest in the stock market because I was in a lot of debt, right? And that's a lot of people are in that situation. But I took advantage of tax-free accounts that I had. And what I did is I created this strategy here, and I'm going to explain it to you guys. So I actually started early in 2020, right around the beginning of the year with this play on Microsoft. I had other things from before, but I didn't have enough money, to be honest. I really didn't, because I rather have my money in my day trading accounts, and I didn't really take the swing trading so seriously. But what happened? Sorry, the investing so seriously. So essentially, what I did, guys, is a lot of people always ask me about Bollinger Bands, and this is where I use them. So the bottom Bollinger Band, the mid Bollinger Band, and the inside bars. Those are the three things that I use for my long-term investing approach. And I'm going to be obviously breaking this down a little bit more if you guys want it, but I'm just going to essentially say this. I have something called limit orders, which are basically saying I have limit orders when the price comes to the level, it buys me shares. So I always had limit orders on the mid Bollinger Band and the bottom of the Bollinger Band that are waiting. So those orders are always waiting to be filled. So when the market does start to come down, when the stock does start to come down, then it's going to come into my orders and it's going to fill my orders. And I never put in a lot. I'm always just putting in a little bit and a little bit, little chunks of money. And essentially with those little chunks of money, like I'm always making money on a monthly basis from my jobs, etc. And I'm always taking a portion of that and I have it ready to put into my stocks, that the ones that I want to hold. So what I do is I tag the mid band, I tag the bottom of the band, and anytime I get an inside bar set up, I use a stop limit. If it breaks above that inside bar, I add. So here's an example: add here, add here, add here, add here, add here, add again mid band, add on the break, add on mid band, add on the break, add mid band, add on the break, mid band right here, mid band break, etc. So obviously it looks like amazing, like a superstar, but that has to do with me picking particular stocks that I use every single day that I believe I can hold. And some of them do have went against me. As an example, Baba was one of them. So this is the only stock in my long-term portfolio that's red. It's Baba. Otherwise than that, I have Microsoft. Okay, I have PayPal. Okay, same thing I've been doing with PayPal. I have Amazon. I actually got into Amazon a very long time ago, which I'm blessed with that one. At least I did that one. I have Google, okay, and DraftKings. Okay, so those are my main. And I also put some money in the index, and I also put some money into futures. Okay, so that's kind of my approach with those. I don't have a stop loss. I use the Bollinger Bands, I use the inside bars, and I use those as a guide. And actually, I did a video on this. Let me see if I can find it. I don't think a lot of people watched it, but I think it's worth your time. Let me see if I can find it for you guys. Right here. I'm going to put it up on the screen. So this one right here, guys. Full tutorial, best investing swing strategy, inside bar and dollar cost averaging. So watch this video right here. Okay, let me just copy it and I'm going to post it in the chat for you guys. So I talk a little bit more about that. Okay, and you guys can check it out there. So what I'm going to be doing is I'm going to be doing a series on this. If you guys really want it, like I said, comment below and let me know that you want to see that investing strategy. I'm working with my little brother and I'm helping him build his account, which is going to be an account for the next probably 15 to 20 years plus, right? And I'm not sure if you guys are really into that, because obviously a longer time, but let me know. Let me know. Are you guys interested in that? Hit me with a 2 if you like long-term holding, or hit me with a 3 if you're primarily here for day trading and swing trades. So let's see. Yeah, so I see some people definitely looking for investment strategies. And my view is this. I do a mixture of all three. I do investing, I do swing trading, and I do day trading. I do a mixture of all three because the truth about this game is that each one of these types of plans are going to have winning and losing streaks. Okay. So they all have the pros and the cons. Investing, obviously, it's a lot less involved in a sense. Day trading is heavily involved. Swing trading is also kind of heavily involved. But what you'll notice is that, especially like when you have a long-term investing account, you can also day trade as a hedge. Meaning, if your whole portfolio, your long-term portfolio is all bullish, everything's bullish, and then you want to take some puts from a day trading perspective, that can actually kind of be a hedge to help you with that risk that you deal with. All right. So back to what we were talking about. So I don't use stop loss in investing. I always use stop loss in swing trading and day trading. And I use options and stocks/shares. So let's go to a recent example. Let me pull up one of our winners here. So General Motors. Okay, so this is one of the swing trades we took together in the private room. And let me walk you through this one as a great example. Okay, so we're going to go to General Motors. We're going to go down to the weekly. All right. And let me just put the entry and all that for you guys. So the entry on General Motors was 49.91. So I'm just gonna, let me get rid of my old markups here so we can do this together. So entry was 49.91, and let me just make sure the stop loss was, sorry, 49.91. Stop loss was 49.01. Okay. So let's move this over here. All right. So friends, for those of you that have the book and all that, the guys that follow me, what trading pattern is this right here? So I'm going to hit the replay. So this was a swing trade that we took in the private room together, guys. What trading pattern is this right here? Which one is this? For those of you that have the indicators and all that, which one is it? Yes, exactly. So here is the Trading Wars Nirvana pattern. So we have an inside bar and an outside bar. So basically with that, guys, what I'm looking for is I'm looking for that nice actual push in either direction. And in this case, I was looking for the bullish side. So you can see here, let's go to the daily chart. So this is my setup. So this white line is my entry, the red line is my stop loss, and then the green line is my target. So I'm going to go ahead and press play. Okay. So right here, guys, on this trade, we are filled. You see this wick right here. The wick comes into our price and we are filled. So let's talk a little bit about the mechanics on this trade. So what we did right here, guys, is at the time I was risking $350 on General Motors on the swing trade. So as you can see right here, I needed to buy, see this says quantity, 388 shares. So I bought 388 shares at a price of $49.91 using a buy stop limit. With my buy stop limit, I attached two orders, a stop loss and a target. So my stop loss was 49.01. So if General Motors decided to actually come back down and hit that 49.01, I would have lost $350. But instead, this trade actually went to 2 times. So 2 times my money. So 2 times my money, guys, means $700. So let's let this trade play out. So my 2 times target here, so is right about there. Okay. So once it hits this right here and this, and once it hits this green line here, is going to hit my target and I'm going to be out of the position. Okay. We're almost there. Boom. Then we get it right there. Okay. So the stop loss gives me protection in case this turns around and it starts dropping even more and more and more. It's going to cut my losses right here at $350. All right. So hit me with a 4 real quick if you're following me, okay? Because I don't want to go too fast. But the stop loss is basically, it literally means what it says. Stop the loss. Stop the loss. So when I'm coming against me here, when it hits this red line, that's gonna stop my loss at a fixed amount of $350. You can put the loss to whatever you want. The risk right here on Tradingview, guys, you can put it to whatever you want. So this amount here, I try to keep it to 1 to 2% of my capital. Depends on how many trades I take. Some weeks I take a lot of trades. So therefore, I will actually have a smaller risk instead of a bigger risk. Okay. So that is a stop loss. What type of order is it going to be down here? What's the stop loss order going to look like? For those of you that trade help us out here, and I'm also going to share, but I just want to get the community involved. What order is stop loss? What kind of order is that? Is it a buy order or sell order? And while we're doing that, guys, I'm going to go to the private Twitter right here, and I'm going to show you guys some of my entry, like my orders. Okay. So first and foremost, I just want to say I am very grateful beyond words to see that this room is at 927 followers. I am very, very grateful, and I'm very thankful. So thank you so much for everyone that supports me. You guys mean the world to me. And that's why I'm doing this, because I want to continue to help you and help your trading. Okay. You guys support me, I support you. You know how we do. All right. So we're going to use a sell order, correct? Okay, because we got to get rid of the position. We got to get rid of the shares if it hits that stop loss because we bought them. So we're going to use a sell stop. Okay, stop, a sell stop. So it's going to, as soon as it touches that price. So in this case, the price is 49.01. So as soon as it touches 49.01, it's going to sell my shares. Right? So let me show you guys an example of that. I actually have some screenshots here. All right. So this is Interactive Brokers. This is the broker that I use, not affiliated, but here we go. So this is an example of a bracket order that I put in for Snap. This is a long time ago. This is when I first started the room. So the stop loss is actually a part of the attached orders. This is the entry, but you see this right here. So in this case, sell 22, stop 5012 GTC is my stop loss. So it's saying sell 22 shares because that's going to be that's how much I'm getting in, 22. And it's going to stop that at 5012. So if Snap comes back down to 5012, it's going to stop me out there, and it's good to cancel, meaning that the order will always be open until I cancel it. So that way I don't have to continuously go back into the broker every single day and manually put those in. Okay. Here is another example right here. Okay. And then, we don't want to show that one, but there we go. All right. So there we go, guys. All right. So hit me real quick with a 1 if you're following me so far. So that's the shares. And then we're going to talk about the options now. All right. So real quick, before we go into the options, guys, hit me with a like real quick on this video. Okay. Real quick, guys. Come on. I'm doing stuff that some other guy's going to charge you $5,000 for and claim that there's some special secret sauce. There is no special secret sauce. All right. So hit me with a like real quick, and let's just go check this out, guys. Let's see if we broke the goal. Let me go back to the main channel. Let's see if we got it. 2966. All right, guys. All right, we're getting there. We're getting there. I believe we're gonna get to 3,000 by the end of the stream. All right. Okay. Let me just talk real quick about this before we talk about options. So look at this, guys. So people are like, oh, why do you have other channels? Why do you do this? Why do you do that? Guys, look at this. Follow me for a second. Come to the pinned tweet. Okay. Step 1, add the trading war indicator to your chart. This is the free golden indicators. Step 2, review the YouTube guide. Here, free complete inside outside bar trading strategy. Example 3 is an actual chart with an example, guys. Look, I have everything laid out for you guys. I'm like, you guys are like my, like my younger brother, my younger sister. I'm holding your hand. I'm holding your hand. Check this out, guys. Add the indicator, free indicators. Add it to your chart. Watch video on how to trade it, and there's a chart example for you guys. There's nobody out here doing what I'm doing. I promise you that. All right. So please go ahead and hit me with the follow here, guys. Come on, let's get this up, guys. There's channels that are showing naked pictures that are getting better than me. All right. Yeah, guys. Oh man. Oh man. Hopefully we don't have. Hopefully we don't have the audio issues today. But I know the Hard Rock is giving me a hard time. Audio was bad for a sec. All right, let's continue to monitor it. If it's really bad, I'm gonna try to switch over to my I'm gonna try to switch over to my data. But the Hard Rock is giving me a hard time. That's how we do. All right. So now let's talk about options. All right. So generally, when I take options on a swing trade, I accept 50 to 100% risk. So what that means is when I take it, whatever I put in, I understand that I could lose between 50 to 100% of the option premium. Most of the time, I just accept 100% of the risk. So now, if we're doing mixing in options, you see how I risk $350 on the shares? Now, with the options, what I'm going to do is I'm going to buy $350 worth of calls. Okay? I'm going to buy $350 worth of calls. And because my setup here is on the weekly chart, I'm going to get 2 weeks out because I like to take my setup multiply by 2. So I'm going to take 2 weeks out from my actual setup. Okay? So with the options, for me, when I'm swing trading, I accept pretty much the full risk. You can use a stop loss, but because of the volatility, you have to be aware that sometimes you're going to get poked out. That's the only thing you have to worry about. So how do you actually set a stop loss with the options? Well, you set a stop loss with the options in 2 ways. Okay? So make sure, just let me know real quick. Hit me with a 3 if you got the pen and the pad out so we can write this down. Hit me with the 3 real quick, and I'm going to tell you guys exactly how we put the stop loss with the options. Okay? Good, good. All right. So the first thing that we can do right here is we can do conditional orders. Right? And you guys know I wrote about this in my book extensively and I gave some examples. But right here, so I want to stop out on the shares if it breaks 49.01. So if it breaks 49.01, I want to get out of the shares. So I can also set a conditional order that says if the stock hits 49.01, also sell my options with a stop loss. So sell stop my option shares. The same way we have a sell stop down here, we'll do a sell stop on the options. And you have to put it at the market because whatever the price is at the time that it triggers that 49.01 for the underlying stock is going to sell your options at the market price. So it's kind of a little bit more tricky to know exactly what you're going to get because it's a market price. It's hard to know what you're going to get, but that's the only way to do it based on the stock. The other thing you can do is say, all right, say the option contracts cost $350. So that's going to be $350 worth. So what you can say right here is you can say stop loss when this option gets to, let's say, $2. Okay. You can do that right there. So you could set that also. So you could put a sell stop on the option itself for $2. The only problem with that, guys, is like I said, is sometimes when there's volatility that it might tag you. It might tag you. So the stop loss is actually a little bit better when you're day trading because you're looking for momentum, you're looking for a move right away. Swing trades, you got to kind of sit back a little bit and you have to let it get to fruition. Okay? So there we go, guys. So basically, we talked about the stop loss with shares. We talked about the stop loss with options. With options, we can use the stop loss based on the underlying. We could take the full risk or we could put the stop loss based on the contract. All right. I always do shares and options, both when I take a play, because the options, if I hit my target very quickly, the options are going to go up like crazy. But if it takes me a long time to get to my target, then the shares will most likely make more money because the shares don't decay with time. Okay. So hit me with a 5 if you guys are following me there so far with everything. And yeah, so just to summarize again, we're pretty much only going to use, boom, Jonathan right here again, brother, $2. Suggested mix of swing and day trading options. Yes, that's what I like to do. I was, make sure that you're comfortable with it first, though, because they're very different strategies. Swing trading and day trading are very different. They're not the same at all. Very, very different. So make sure you're comfortable with it first before, but ideally you want to do a mixture of everything. Okay, back to the chart. All right. So we talked about when I use the stops, how to use them. We use an example. Now let's talk about stop loss placement. All right. Let's talk about stop loss placement. You guys interested in that? Stop loss placement. That is a different topic. And it depends if you're day trading or if you're swing trading. So let's talk about some day trading examples. Let's go to Facebook, which was a Lotto Friday pick, and let's discuss this one. I saw somebody wanted to talk about this as well. So as you guys can see here, Facebook went for 1,000% to the upside. We actually had a trigger right away at the open for puts, and that one quickly reversed and failed. And then the calls shot to the moon. So here's a great question. How do you know when to cut those losses, right? So there's two ways that you could do this. All right. So when you're doing options, especially on Lotto Friday, when you're doing options, if you're gonna, because of the fact that it's gonna expire on the same day, you can basically just assume the full risk. So let's say you put $100 on the puts, they failed, and then you got $100 on the calls in the opening range breakout. Well, guess what? The calls, $100 worth of the calls went to $1,000, and then the puts you would have lost 100. So you still make a profit of 900, which is still pretty good, right? Boom. Nestor ES with the $3 super stickers. Thank you very much. Appreciate that. I got the fist bump. Appreciate it. But now let's say it's not a Lotto Friday. Let's say it's like a Monday and you can stop yourself out. Or let's say you're taking shares. You can also stop yourself out. So generally, guys, with these triggers, when we break through the trigger, what we normally see is that we can retest the trigger and we can follow through. But generally, we're not going to come and take out this gap. So you could see right here, here's a line. You see this gap right over here? So that's an example of where I would have my stop loss for my puts or my shares. Okay. A very aggressive approach is putting the stop loss above the trigger bar. Okay. So the bar that fills you into the position, the bar that fills you into the puts, you can put your stop loss on the opposite side of that. So that's your protection, because if it breaks through and then it starts turning around and then it comes back and breaks that high, you want to get out because you could see this was just a trap, right? So there's a lot of variations. It depends on how aggressive you are as a trader, right? But there's an example. Another thing that I like to do is I like to use the Fibonacci. Okay. So what I'm going to do here is I'm going to use the previous day's range like this. I'm going to measure it out like that. I'm going to extend it out like this. Okay. So right here, guys, you can see here's my range. Right when this trigger breaks down here, guys, when this trigger breaks down, generally, not all the time, I'm saying generally based on testing and trading, generally, when we break that trigger, we should not come back and close above this 236 line. When we break that trigger, if we come back and we close above this 236 line like we did here, the trade is most likely dead. Sometimes it's going to come back down or whatever, but we don't play for sometimes. We play for probability. Okay? So right here, this is how you know that this could be a fail. push down and then come back and close. This is also a sign for you to flip. All right. So that's an example of using the Fibonacci. Okay, that's the previous day's range, Fibonacci. And we can also use the Fibonacci of the candle. All right, but I don't know if you guys are ready for this one right now because this is a little bit hype right now. I don't know. Hit me with a 5 if you're ready for the Fibonacci of the candle. Right now, hit me with a 5 real quick. Like, blow me away with a 5. Blow me away. Hit me with that 5 so fast that I got to drop to the ground, get some water. Hold on, let me take a water break right now. I'm showing you guys a lot of things over here, man. I'm telling you, a lot of people ain't going to be showing you this. I'm actually surprised we only have 240 people. But it's okay because I'm just here to help people that want help. I'm not here for entertainment. I mean, I do entertain a little bit, but it's mostly to help the people that actually want to better their life. I'm not here for jokes. All right. So let's go ahead here. So as you guys know, those of you that have the book and all that, all right, let's do this right now. Hit me with the 1 real quick if you brought your book to class. Hit me with the 1 real quick if you brought your book to class. And I want you to go to the opening range breakout section, and then we're going to talk about some stop loss placement. Okay? All right, great. So we have the replay right here. All right. So the first thing is we knew that Facebook was setting up for a trading wars trade. We had that inside bar right here. Boom, my brother Red Lock with the 199 super sticker. Let me check that super sticker out right there, brother. All right, we got the finger up. Boom, 499 right here. Jamel Bait, much needed topic for me. Thank you, brother. Appreciate that. All right. So we know that we have the precondition. If we go to the daily chart, we can clearly see we have a beautiful inside bar setup. So we know that the next day we are looking to drill down at the open, and we're going to be looking for our setups. So one of the first setups that we have, right, guys, is the opening range breakout. So here is the first 5-minute bar right here. So generally what we do with the first 5-minute opening range bar is if we break the high, we go long. If we break the low, we go short. Okay. So if we break the high, we go long. If we break the low, we go short. And normally what we do is we put the stop loss on the other side. So if we break the high right here, then we'll put a stop loss on the other side, right? But what about this? What if we can actually get a better stop loss so we can cheat the stop loss a little bit? So meaning if we do get stop loss, we're going to lose less than if we put the stop loss down here, right? So all your books physical or digital, brother? Digital. I'm not going to the mailman and printing out books, guys. I don't got the time for that. But right here, let's zoom into this bar and let's discuss. So this bar is a very good candidate for an opening range breakout because it has wicks on both sides, and it also broke down the trigger from the previous day. So that is also showing that there's a lot of trap bears, and we have some trap bulls also because we could see this pressure. So what we're going to do here, guys, so those you're on your opening range breakout page, we could take the Fibonacci of this bar from low to high like this. And what we're going to do here, guys, is normally we're going to take it when it breaks the high like this. Okay, we're going to go into the play and we're going to put the stop loss down here. But what we're going to do instead, guys, is we're going to cheat a little bit. We're going to take this. We're going to leave this one here, but we're going to take the stop loss and we're going to put it on so here's the 786. We're going to put it in the middle between the 786 and the 886 like that. So some of you guys are going to be asking, like, why would you do that? Why would you do that? Guys, because look, you're saving this much distance right here on your stop loss, this much distance. So you're going to save, let's say you're risking $200 here. You might save $25. So now instead of losing 200, guys, you're losing 175. Do you understand that? That's way better. That's so much better, because now if you take that $25 that you save on this trade and you multiply it by 100 trades, now we're talking about 7,500. You guys understand what I'm showing you guys? This is kind of secret stuff. Not a lot of people talk about this, right? Hit me with a 7 if you understand what I'm saying here. So this right here, guys, this is a way to basically cheat the stop loss. Instead of having it all the way down here, which you learn from books from the 1940s, what we're going to do is we're going to use a new style, because the new style is a style that I've been backtesting and I study. And don't get me wrong, sometimes it's better to have your stop loss below this low. Sometimes it is. But the problem with that is this. You're going to lose a lot of money if it comes all the way back down here. But we can cheat a little bit and put that up here, so that way we're going to lose less on the trade. And that adds up over time. Why I do this is because I trade. I'm a trader. So obviously I'm trying to improve and make more money. So let's go ahead. Bar comes in, boom. Now watch this. This bar comes in here. It opens right here. It tags a 618. Do you guys see this algo fill here? Look at this algo right here, just waiting. Okay, algo, boom, takes it from the 618, bam, squeezed. That's an algorithm play there. You see the 618. I love the 618, guys. I love it. I love it. Thank you, 618, so much for what you do for the world. We appreciate you. Hit me with a 618 real quick, guys. Hit me with a 618 real quick. These are things, guys. These are things that you don't see. All right. So instead of even coming up here, guys, we could have limit orders on these fibs, but I'm not going to talk about that today. That's a topic for a different day, because we're talking about stop losses right now. So now, instead of putting your stop loss down here, your stop loss is here. Okay. And now what are we going to do now? Now what are we going to do? Well, once you see that algo step in, when you see that algo step in, guys, you can put your stop loss there now with the algo. See that? Do you see how I just took a trade and just basically cut your risk in half? Initially, the stop loss is supposed to go below the low. We cheated here because we know we have an edge, and now we see the algo come in. Now we're even here. So now instead of risking $200, you might be risking $100 on the trade instead. That's what you call advanced trading strategies to make more money, to lose less money. Right? And then I don't even have to tell you guys what happens after that. That's it. See that? And you know that you got a good algo. You know that you have a powerful algo when that level never gets touched again. Never. Did you guys see this level? Once we touched that one time, there was that bids, those buyers, those algorithms were just waiting right there, and they just took it like that. Gone. That's how you know you're on a powerful one. But effectively what we did there is we took a trade, we cut the risk down in half. So even if it comes against us, guys, we're not going to lose the full amount because we already cut our risk in half, guys. If we do this consistently, we cut our risk in half. We get it into a good spot, guys. Do you guys think we're going to make more money through proper stop loss management or less money? Hit me with a 1 if you think you're going to make more money. Hit me with a 2 if no. Some of you might be wondering, like, where do I figure this shit out? Like, where do I come up with this? Come up with this, guys, from trading the markets every day, from backtesting, from logging, from understanding the Fibonacci, from studying. I put a lot of time into this, guys. A lot. There we go. So let's get back to the chart. So I think I went into a lot of high-level topics here, and I really hope you guys enjoyed it. Let's see where this is at, guys. Come on, let me see. Make me happy. Let's see. All right. 27 more. All right, we're almost there. We're getting there. All right. So the lesson, we talked about the stop loss today, investing versus swing versus day. We talked about the placement. We talked about the management. We talked about options. We talked about shares. I basically gave you a $5,000 course in 45 minutes, and I'll be taking payment after class. Thank you very much. All right, I'm just kidding. All right, now let us proceed. Let's continue. So now what we're talking about here, guys, is the other thing I want to talk about. The picks are ready to go for tomorrow. We already posted the picks on Twitter. Check it out. Right here. All right, ready to go. We have the picks ready for tomorrow. Last week was a great week. Hopefully we get another one. At some point, we're going to have a bad week. I'm going to keep it real with you guys. At some point, we're going to have a bad week. It's not always going to be great, but so far it's been good and we keep riding the wave. We also have bonus picks, guys, in the bonus members area right here. Bonus picks for my members. I have another one down there, but I can't show you guys. But, you know, these are the ones that I've been calling out all week, guys. A lot of these ones hit pretty well, actually. Boeing hit well. Twitter did well. So I got another one in there. If you guys are interested in joining the service, it's up to you guys. You know, I do not want, it's up to you guys if you want more picks. If not, just rely on the free ones. Those are more than enough. So now the swing trades, I want to talk about those real quick. So these are all the swing trades that I've taken for September. We're very close to getting stopped out on this one right here, Kraft Heinz Corp. We have not got stopped out yet, but we are very close. General Motors, the ones I showed you was great. DraftKings was great. Chipotle Mexican Grill and Lulu both hit partials the other day. We're still in those trades. These are my new swing trades for next week. Zillow, Low, Oracle, Etsy, and Twillo. These are my picks for next week. If you guys are interested in swing trading, join the room, and all those orders are already there and ready to go for next week. I wanted to talk about being defensive. As you can see, you see a lot of these orders that I had here are closed. So I wanted to talk to you guys about what that means. So let's give an example. Peloton. So Peloton was last week. Okay. So Peloton, we had a long swing trade entry at 114.37. So let me show you guys something now. Okay. So we go to Peloton, go to the daily. So this was our entry 114.37. Okay. So we wanted to get in Peloton. This is why it's very important. So get the pen and the pad out right now. The pen and the pad out right now. It's very important to have stop limit orders, meaning only fill me when it breaks through the price. So we could see right here on Peloton, last week, Peloton never came and hit my entry price. It never touched my entry price right here. Okay. So because it never touched the entry price, I never got into the trade. And look how much Peloton dropped. Look at that drop. So Peloton dropped, guys, almost 20%. All right. So I never was entered in the trade because I want to get in at 114.37. And then what I do at the end of the week, I look at the chart and I say, okay, this trade is no longer valid, and I close it. So I close the trade on the broker. So that's something that I do. Just wanted to show you guys. So anything that says closed were the ones that didn't get filled because they never broke through my price. And that's called being a defensive trader. So because the market was, you know, a little bit, it had a mixed feeling this week, last week, sorry. So what I did was, if my orders didn't get filled, I just cancel them and move on. So that way I only want to get filled at the price that fulfills the trading plan. Okay. All right. So there we go, guys. Someone said, let me see. Oh, the box automatically comes up for me, brother. But anyways, all right, the book, and then we will get into the giveaways. All right, so the book, guys, here you go. It's my legacy right here. You guys know the book was released almost 2 weeks ago. The drill down method. It's at $99.99 right now, guys. You get 1 month free in the swing room and the Discord. You get the Nirvana and the golden indicators for free. 75 detailed charts with video. Table of contents is right down here for you guys to read. Here's some snippets of it. I'm gonna keep this price for a little bit longer at $99.99, and then I'm gonna be raising the price. So I'm just telling you guys right now. All right, if you want to get it, it's still on sale. I think it's a good deal. You get 1 month for free in the service. I mean, it doesn't get any better than that, in my opinion. Then, if you want to, you can sign up for the giveaway. So here's the giveaway, and we're going to be doing 2 winners for the giveaway right now. So if you don't want to buy the book and all that, sign up in the giveaway, guys. All right, I'm trying my best to help everybody. I'm not one of those guys that are just here to help. Like, I know some people are struggling. I know that, guys. So I'm trying my best to help everybody. Okay. So right now, let's go ahead and let's pick 2 winners for the book right now. All right. Let's do 2 winners for the book. So hit me with the 9 if you're excited. And we're going to do it. Hit me with the 9 if you're excited. And also, guys, hit me with a 1 if you found the session useful and you were entertained and you had a good time. All right. And one more thing I'm going to say is the investing series that I'm talking about here. It's going to be a series that's going to take a lot of work and a lot of commitment. So this is what we're going to do. Before we go into the giveaways, please do me a favor. Like the video. Subscribe if you haven't. I know you already have, because you guys know that what I'm doing, you could be charged a lot of money for. So I know you guys already subscribed. But comment below which one of these topics are you most interested in. I need to know. I need to know how to build this channel. Are you investing? Do you want to know more about investing? Do you want to know more about swing trading? Do you want to know more about day trading? Let me know in the comments below which one you guys want to do. Let me know. So I will build the channel for you. For my audience, for the people that support me, I will build it for you. You let me know. If you want all, put all. Okay? Whatever. You put it down in there in the comments, guys. And not in the live chat. In the comments in the video. And the reason why I put it in the video, because it helps the algorithm, and then maybe we can get a big boost, and then maybe we can go viral or something. Okay? So please comment in the video. Not in the chat, in the video. So I guess you'll have to comment after. Okay? Let's go. Let's do the random number generator. And let's get this. So start the drum rolls, guys. Let's get the party started. Take out the Hennessy and let's get it going. How many do we have today? We have 1616. Very interesting number. So 1616. Get the Hennessy out and let's do it. All right, we got the drum rolls, and we are going to press the button right now. I'm nervous, and I'm not even winning anything. Ooh, okay. 1164. Let's see who we got here. Gotta scroll up. Okay. 1164. Anonymous here. All right. So I am just going to say the first name. Okay, first let's read the comment. Learning about automated swing trading to simplify life and minimize emotions in trading is why I appreciate Trading Wars. Beautiful, brother. I love that. So this winner, his name is Geoffa. Okay, I'm not going to say his full name just in case they don't want me to say it. I have your email right here, brother, and I will be sending you an email with your to get your free book right after this. All right. If you're in the stream, you feel free to holler at us. All right. So Geoff, Geoffa. Okay. Good stuff. Good stuff. All right. Ready to do another one? Ready to do another one? Hit me with a 5 real quick if you're ready to hit another one. I'll be sending you your book right after this, brother. Anybody that wins and already has the book, you can get my first book, the Fibonacci book, or you can get a refund. You can do whatever you want. Whatever you want, man. All right, let's hit it again. I'm scared. 873. So let's see what we got here. I mean, this is pretty cool, man. I wish the channels I watch give me giveaways like this, man. All right. Okay. So this one says, I just started trading and I'm hoping to learn a lot from you. How Dong. Haodong. How Dong, and the last name starts with an S. All right. Congratulations, my friend How Dong. Okay. Appreciate you. You won. All right. I'll be hitting you up right after this with your free book. All right, man. So there we go, guys. Yeah. So 2 winners. We keep it going. Next week, I'll be doing another 2. I told you guys that I'm the type of guy that's always going to give back. I'm not going to go against my word, guys. A lot of people are making money and a lot of people are greedy. A lot of people are greedy pigs in this world. And that's not me. I never will be that person. All right. So there we go, man. Great. What else? Do you guys want to hit me with 5 chart requests real quick? And then we'll head out. Hit me with 5 chart requests real quick, and then we'll head out. Give me some names. Throw them up on the screen. And then we will head out and have a good night. All right, so what we got here? Boom. So AMD is the first one I saw. Yes, we are on AMD right now. Let's talk about AMD. So the last time I played AMD was off of this inside bar right here on the daily chart. I got in, this was on a Monday. I got triggered in. I used the actual conditional orders with the robot. We took those right there. And this one went for, I think it went for 10 times the money by Friday. Okay. I think it went for 10 times. I can't remember if it was 5 or 10 times the money, but this one was a banger. So I'm looking for the same type of play right here with AMD. Nice setup. So we're going to play the drill down at the open. We have the triggers on both sides. We have the opening range breakout and the Fibonacci, and definitely looking like it's getting ready to set up for something. If we go to the weekly right here, guys, I'm going to tell you guys another little secret here. AMD had a beautiful outside bar last week, and I'm very intrigued on playing this name. Very, very, very intrigued. All right. What else do we have? Tesla. So we'll start off with the weekly on Tesla. Right there on Tesla, that looks like an algo fill. So let's see if it is. So let's take the Fibonacci of last week's range right there, and let's see. Yeah. So there we go. So beautiful 786 fill, guys, right there. That's an algo fill. So basically for Tesla to continue higher, this level has to hold right here. So this level right here, okay, that has to hold because that is obviously a big buyer stepping in there. So right around 719.64, as long as that level can hold, guys, we can continue to go higher. It's very important to watch those algo fills and use those as the line in the sand. And also a very bullish bar. So, this might be the run that Tesla is looking for to retest all-time highs. Let's see where it goes from there. Definitely like that algo fill though. So let's see. Let's go to the daily. Is there anything here? Oh my God, look at that outside bar. Very, very powerful. Let's go to the 5 minutes. Let's look at this. You see this right here, guys? Beautiful outside bar on Tesla. Look at this. So we opened below the previous day's low. We trapped a lot of shorts and then we squeezed vertically. Like, look at this. And I know somebody messaged me and they said, hey, I played the Nirvana pattern. There was the Nirvana, Trading Words Nirvana pattern. I played the Nirvana pattern into the close. So I know somebody made a lot of money on this one right here. A few of you guys are making me very proud where you're taking the strategies and you're going off and doing your own thing. That's what I'm here for. I want to teach you how to fish. I'm not trying to bring fish to your bowl. I'm trying to teach you how to fish, because there's 100 million ways to make money in the stock market. I give you the tools, you go out there and you get it done. All right. So right here, guys, this outside bar, we can play this bar by itself. This bar is very, very critical with Tesla. Mark my words, this bar is critical. The break above, the break below is going to be important. And either side of this bar, it has a lot of buyers and sellers. So this bar is very key. So we're going to watch this bar very, very closely. You see how big this bar is and the size and power? Very, very, very powerful. All right. MU. So MU, I believe I posted this on the weekend on the 2-week chart. There we go, guys. So this one right here, man, I haven't seen some, like, earnings is right around the corner, I believe, 28th of September. So there is a lot of action brewing into this earnings for MU, because look at this, guys. This is 1, 2, 3. This is 4 weeks times 2, because I'm on the 2-week chart. So this is 8 weeks of basically horizontal trading. Horizontal. So no one is really certain on what this earnings is going to be. Nobody is certain at all. That's why we're going sideways. So this, when the earnings happens, that could be a major catalyst for the next move on MU. Whether it's going to be a crash or a break into new all-time highs, we don't know. But once we get those earnings, we can play off of those earnings to see. We can visually see right here that it's been going sideways for 8 weeks. Very, very powerful setup. 2 more. Boom, $2 right here from brother Clark Rodriguez. I really appreciate you. I really appreciate you, brother. I see you all the time. Thank you very much. Amazon. All right, so Amazon, very clean right now. This is on a Fibonacci. I can tell. Let's go ahead and draw this small leg right here from low to high. Boom, that's what I thought on the 618 right there. So this level right here for Amazon is going to be very key. We can also see the algo stepping in. So 33.17 right around here. The on the weekly, this low needs to hold. Continue this move out higher. Let's go to the daily and see what we have. So we had that inside bar a few days ago, a nice little break above and continuation. There's this gap right here is potentially going to be an area of resistance to be aware of. But if we look at the weekly, that low needs to hold for the bulls to continue, break through here, and then break into all-time highs if they have enough strength. Boom. Chris right there with the $2 super sticker. All right, let's do a pick for Chris, guys. Facebook, Holy Grail, Inside Bar, Nirvana. Yes, sir. You are right, my friend. So Facebook is one of those that are really on my radar. You can see right here, there's the Trading Wars Nirvana pattern right there, guys. With Facebook, we had that inside bar and that big outside bar. We already looked at it on the 5-minute chart, and we could see that huge play from last week. Facebook is one of my top picks. I'm very, very interested. I actually, I'm on Facebook, very, very interested. So we got a beautiful setup. On the weekly, we also have one of my investing strategies. Remember what I told you? We had that retest right there of the mid Bollinger Band right there. You can see it, that retest right there, guys. Okay. Boom, retest. That's one of my longer term investment strategies. So clean. I like it. I like it. A lot of opportunity this week. Let's go ahead and see how we do this week. So thank you very much, my friends. You're great. You are much appreciated. I really hope that we can grow this stream together. I have a lot to give to the world, and I just really hope that I'm able to reach a larger community of people, because, you know, it's very important to learn this game the right way, because if you play it the wrong way, you'll lose a lot of money. You can lose a lot of relationships. You can even lose your life. I've seen a lot of people go through this bad cycle with this market, with trading, and they've turned it into an addiction, and they turned it into gambling. And that's what I'm trying to stop, that, because I don't want you guys to go through that type of pain. All right. So here we go. Before I leave, let's just close with a remark. Something that's very important to me is, your words, guys. I'm going to focus on this before I go, is your words. What you say about yourself, and what you say about other people is very important because it's almost like a spell. It's like a magical spell. If you constantly tell yourself that you're not good enough, that you can't do this, that you're not smart enough, you're not strong enough, you don't look good enough, if you say those words to yourself, it will become a self-fulfilling prophecy because the words that we say have power, and you need to say positive things about yourself and positive things about other people. When you do that, your life will be more likely to be positive. It's all about those words and those thoughts. So be very careful about what you say about yourself and other people. Be very careful. Okay? That's my advice going into next week. When you speak to other people, when you speak about yourself, try to look for positive ways to say things instead of negative ways. All right? There we go. That's it for me. Take care, my friends. Let's have a great week.